Hello everyone, good morning. Welcome to my channel. This is Emmanuel Odogu, and on this channel what we do is forex education, e-trading education, and also we look at different and various strategies of the market on how you can profitably analyze the market and of course come up with profit for yourself. Okay, so for the new timers, okay, welcome to my channel. For the those that are just returning, also welcome to my channel. So if you're very new here, so you can check out other videos on this channel, on this YouTube channel. You will see beginners videos, basic training videos. But for this particular video, we're going to look at analysis of the market, and that analysis is technical analysis. Of course, there are three type of analysis. Two of them are major, technical, and of course fundamental analysis. So on this video, we're going to look at analyzing the market using one of my preferred technical tools and technical software for analyzing the market, and that is the Freshpips. Okay, the Freshpips. So this software you see here is called the Freshpips software. Okay. All right. So and after the fresh, we're going to look at other ones, right? We're going to look at hybrid indicators if time permits us. Okay. So quickly, let me show you how we can be able to do this. Okay. Now with this is USD card. As you can see, I've already applied the fresh pip on my chart. Okay. But if you have not applied the software on your chart, let's assume you have something like this and you have not applied it. So you are just to click at the template icon up here, then look for the software. And if you don't have it, please, you want to meet any of my at any of our offices, physical offices, so that they can install it for you. Okay, Rally Trade office, so that they can install it for you, or you can contact your account officer. Your account officer can also install it for you remotely. Okay, so you just get to your template, and of course you click the fresh pips here. So that is it. Okay. Now, so once you applied it, the next thing you do is you start analyzing the market. Now, the fresh pip is a collection of several different technical tools. So, okay. Now you are as good as the tools available to you in every discipline. So this tool will enable you to see what the market is doing. For example, the first one we're going to explain here is the arrow. This arrow is called EMA. EMA means exponential moving average. Okay, so the arrow appears and points in the direction the market is about to go. Now this arrow appears and points up. Okay, that's for the bullish signal. This red arrow appears and points down. That's for the bearish signal. For the bullish signal, you want to look for buy opportunities. For the bearish signal, you want to look for sell opportunities. Okay, very simple. So once the arrow appears and points in a particular direction, you're prepared to take your trade in that direction. But then we're not using only the arrows, so you want to look out for other tools. Okay, the first one is the EMA. The second one they are going to look at for is the MACD. This bottom part, as you can see, this double line here is a demarcation line between the main chart. Everything up here is the main chart, then down here is the indicator chart. Occupying the indicator chart is the MACD, as you can see here. MACD is short for moving average convergence divergence. Okay, so it is both a reversal indicator and also a momentum indicator. Now if you look at the MACD very well, discover it's divided into two. Over here you can see it has a zero line that divides it into two. So above the zero line we have this bars called histogram in blue. Okay, now below the zero line we have these bars also called histogram in red. So if the bars are blue above the zero line, it indicates that it indicates a bullish momentum. If the bars are red and below the zero line, it indicates a bearish momentum. Okay, so you want to trade when the momentum of the market is in your favor. I mean, if the momentum is bullish, of course that will be the best time to buy. If the momentum is bearish, then you want to think of selling. Okay, all right, but don't forget we are trading with the trend. Okay, so these are many trends. Okay, all right, so that's the second one. The first one we said is EMA. The second one is the MACD. The third one we're going to look at is the moving average. This red line here is the moving average. Okay, so this moving average, as you can see, is moving average 13. So once the candlesticks are above the moving average, it indicates that prices are going up, indicate bullish bias, bullish momentum. Look at the candlesticks here. Okay, they are above the moving average. The candlesticks are below the moving average also indicate a bearish bias. So you want to consider all of this before you use this strategy to pick a trade. The next thing you're going to consider is this bar. As you can see, this bar, these bars are blue in color over here, and over here they are red in color. These bars are called Egin Ashi. As you can see the name over there, Egin Ashi. Egin Ashi is a trend following indicator, right? It tells you the overall trend of the market. Despite little retracement, right, to the downside or to the opposite side, it tells you the overall strength of the market. So Eginashi is also in color. If Eginashi is in blue, it indicates a bullish momentum. Eginashi in red indicates a bearish momentum, meaning that if you want to buy, Eginashi should be in blue. Okay, so once Eginashi is in blue, you want to buy. Now after buying, if Eginashi turns color, after buying, if international turns red, of course you want to look at closing that trade, because the price is about to go the opposite direction. I think we have explained the EMA. I've also explained the MACD, right? And I've also explained this line here, the moving average. I've also explained the Eginashi. Now let's talk about the candlestick. The candlestick here, we have it in two colors, the green and the red, right? Of course, we know bullish candlestick and bearish candlestick. So the green here is the bullish candlestick, which indicate increase of price on the market, okay? Prices are going up, which means more traders are buying the instrument or buying the financial assets, okay? Then red indicates bearish momentum. That means more traders are dumping or they are selling, okay? So of course, you don't want to be a loner on the market. You want to follow the direction of the overall momentum of the market, okay? That is why we say the trend is your friend. So if you see the market going up, obviously it's buy, you want to buy. Market going down, you should be looking at selling. So all of this I am on 30 minutes time frame, as you can see here, right? So 30 minutes is a good time frame to use on this indicator. On this Freshpip, you can also use H1, and of course the least you should use is 15 minutes, okay, for an intraday trader, not necessarily scalping the market. Then we also have support and resistance. Look at the far right. Let me skew this a little bit. You can see these lines, they are called support and resistance, okay? So the S1 is support 1, S2 support 2, S3 support 3. So these are different levels of support on the market, which you can use as your take profit level and your stop loss, which can guide you towards setting take profit and stop loss. So we also have arrow 1, resistance 1, resistance 2, and also resistance 3. This can also guide you. Let me also show you the resistance 3. Okay, this can also guide you in setting stop loss and take profit, and of course the best place to, and it can also show you the best place to pick a trade on. Okay, now quickly, how do we use this software to trade? I've taken my time to explain each of the tools. How do we use the software, the Freshpips software on the laptop to trade? Now, for those of us on the phone, I also have the Freshpip version on the phone, okay? So it will achieve the same thing, okay? All right. So the arrow, the first you want to look at for is the arrow pointing the direction the market is going. So the first thing to look out for is the arrow. So whenever you want to use this software, you look out for the arrow first. So once you meet the arrow first, then means you're very early. You're very early on the strategy. So let's assume, please, each of these bar is 30 minutes, okay? So let's assume you were there when this arrow appears, or let's say 3 candles after the arrow appear, or even we saw it when the arrow appear, or at this very early stage. Once you see the arrow appear, fine. That's the first sign the market has given you that is supposed to go up. The second thing you look out for is the MACD. So if the arrow is pointing up, we call it a bullish momentum or a bullish bias, right? So you want to make sure that the MACD is also showing blue color. Now it's very possible the arrow is pointing up and the MACD is showing red. For example, look at this. It's very possible the arrow is pointing up, as you can see here, this exact line. If you trace this line downward straight, you can see that the MACD is showing red. Okay, so what do you do there? You do nothing. Okay, you wait, you exercise patience. So over here, somewhere here, you can see that the MACD, the arrow is still pointing up. The MACD has turned blue somewhere here, right? Fantastic. Then of course, at this same point, Eginashi has become blue, right? So the arrow pointing up bullish signal, MACD has turned blue bullish signal. Eginashi, right, has become blue, is blue here, bullish signal also, as you can see. Then you can see the candlestick here is bullish candlestick, right? Bullish candlestick. And you can see it closes above my moving average, right? Closes above the moving average. We can also look out for the candlestick that opens and close above the moving average, but this one is a little bit rocking it, but you can see it closed above the moving average, right? That's also a bullish signal. So after you have seen all of these bullish signal, what's the next thing you do? You quickly enter your trade at this exact point. Let me mark it for you. So at the close of this candlestick is the best time to enter your buy trade there. That's the line there. So that is where it's supposed to be your potential entry point for a buy. So if you place a buy there, automatically the software also gives you or tells you where you set as your stop loss. So your stop loss should be below the arrow that gave the signal. So your stop loss should be here, anywhere below here. Of course, this is the recent low, as you can see. So the arrow doesn't carelessly come out just anywhere. No, it comes out as a point. It appears at a point where you are to use that same point to set your stop loss. So your stop loss should be here, right? Then your take profit can be that same distance. I call it stop loss distance. I mean the distance from the entry point to the stop loss is called stop loss distance. As you can see, it's measuring somewhere around 63 pips there. So that same 63 pips can be used as your take profit, or more than that, or times 1.5 of that, or times 2 of that. But I tell you, you want to go for times 1 of that, right? To easily and quickly take out your profit on the market. So after you have set this as your your stop loss, you can set your take profit. This is the same distance, or even times 1.5 of that, this distance. So you can set it the same distance, right? That means you're risking 1 to make 1, or you can also set it times 1.5 of that. You're risking 1 to make 1.5, which is a better deal, right? So this first one, it means you're risking, for example, 5,000 naira to make 5,000 naira. This second one means you're risking 5,000 to make 7,500. Or this first one means you're risking 10,000 naira to make 10,000 naira, or you're risking 10,000 naira for this second level here to make 15,000 naira, which is a better deal. So you risk small to make more. But if the market presents to you risk 1 to make 1, you can also take that trade, which is good. So you can see from the Freshpip strategy that this was a possible profitable trade. As you can see, profitable trade. This is a profitable trade. Now let me go back a little bit and explain and look at what happened before this particular day. Okay, so you can see this arrow points down here, right? So this is also a bearish signal. So from what I've explained, the arrow points down, the MACD has become red, the Ganache has turned red, the candlestick is below the moving average. So this is the best place to have entered your trade. You enter the trade at this point, right? So if you enter trade there, your stop loss will be above this arrow, right? Then your take profit will be somewhere down here. So you can see, right? You can see the price came down and it gave profit, as you can see here. It also gave profit, but this one gave 1:1, right? sorry, this one gave 1:1, as you can see, before this arrow appear and of course take the price up. So actually the arrow appears, points in the direction the market is going, but it's difficult to tell how far the market can go in that direction. That is why we have other tools to follow it up, right? We have the Eginashi, we have the MACD, right? So let me analyze more for you. Let's look at other instruments here. So you can see, like, this is GP, JPY. This arrow appear and points down, as you can see. It was confirmed by this candle, this particular candle, right, that forms below the moving average. Egenashi is red, then MACD has turned red. If you pick your trade by the close of this candlestick, right, your stop loss over here, and of course your take profit down here. So you can see this one also gave profit. This one is a more recent one. So what I'm trying to say is, you look at for you scan several instruments. How do I mean? You come to your market watch, you drag the instrument into the software and you release it. It opens up for you. Like, look at this one, for example. This one is just beginning. The arrow points up, right? MACD has finally turned blue. The candlestick has given us a bullish candlestick. The candlestick is above the moving average. Egenashi has turned. So everything here is giving us a buy signal. So I'll quickly go to new order, right? Furnish the parameters I want to use for the trade. Let's say 0.02 there, and I'll do a buy. So I've been able to execute one on this video. So this is how we pick trade with this strategy, right? The arrow is pointing up, as you can see. The arrow is pointing up. That's a bullish signal. Then, but at that point, the arrow is pointing up. If you notice, the MACD is still red, so we didn't take the trade. We're not supposed to take the trade at that point. But MACD has turned blue, as you can see. It's very possible to see it at a very early stage when the MACD is turning, right? So it has turned blue, as you can see there. Then the Ginashi has turned blue also a bullish signal. The candlestick is found above the moving average, as you can see that. Then, of course, we want to buy. We are clearly seeing a bullish signal here, right? On the candlestick, a green candlestick. So this is what you do. Then also, let me also show you how to set the stop loss and take profit on this. So you take your mouse pointer to the green dashed line. That's the entry price. Once you're there, it will show you drag to modify, as you can see. Then, of course, a two arrowhead will be joined with the main mouse pointer. So you click and drag. Like I've explained earlier, the stop loss should be found below the EMA arrow that gave the signal, of course. So as you can see, the amount of the stop loss at the far left hand side. Okay, so let's just keep it at this 4,000. Yeah, so I'll just leave it there. I am on one click trading, so it just appear. So I will drag also for my take profit. Now ideally my take profit should not pass this resistance 1, as you can see, right? But then it will not follow through because the take profit will be so small compared with the stop loss. Now, so, but I'm going to exceed the resistance 1. That means I am hoping that the market will break through resistance 1. That's what it means, okay? So that can also guide you while taking a trade, right? To take a trade that is a bit far from the potential stop point, that is the resistance. Ideally, you want to take your profit from a buy trade at the resistance. I want to take your profit on a sell trade at the support. Very important statement. So I can keep my take profit level here, right? Because this is a recent high before this trade, or I can extend it to the next resistance there, as you can see. So I have just reached 4,000 naira, and this is about how much is it? 6,000 naira. So which is a good deal, right? Resistance 2. I'll just leave it there. So this is how to use Freshpip to take a trade, right? These are to use Freshpip to analyze the market, and also to pick a trade, and also to set the stop loss and the take profit. I hope all of this will help you. Now, if I'm too fast, you can maybe watch it again. Okay, I'm trying to make sure that the video is not a large one. So this is how you can use Freshpips. Let me also do this other one on this same video. The hybrid indicator. So if you don't have the hybrid, you can also contact any one of us in Raleigh Academy to install for you. So this hybrid indicator is another powerful indicator and very simple. I tell you, simple things that gives profit on this market. I can tell you that. So this is on 30 minutes time frame, right? So it has the arrow. The arrows are the EMAs again, right? So the arrow points in a particular direction. Now this hybrid is a combination of both the arrows, as you can see, the margin, and of course the crossover strategy. Crossover is two moving average, one fast, one slow, and two of them crossing themselves. That's what we mean by crossover strategy. If you look carefully, you will see a blue moving average, right? And if you look, you also see a red moving average. The blue one is the 13 period moving average. The red one is the 50 period moving average. So the 13 period, which is the blue one, is faster than the fast moving average. Then the red one is the slow moving average. Okay, so the fast one is the one always closer to price. It's the only one always closer to price. That is the one that always crosses over the slow one. Okay, fine. So for a bullish signal, the fast one has to cross above the slow one. I mean, the blue line has to cross above the red line. Let me zoom in a little bit. Okay, fine. The blue one has to cross above the red one, right? Then the arrow, of course, should be pointing up, right? The EMA arrow should be pointing up. Then also the MACD should be showing a bullish momentum. I mean, should be blue. So if the MACD is blue, the arrow is pointing up, bullish signal. Then the line, the fast moving average, has of course above the red one, bullish signal. Then you want to look out for a buy trade. And when can you take your buy? Once you see that there is a cross, let me draw this line here. Once you see that there is already a cross, so once you see that there is a cross, the next bullish candlestick you sight, this is where there was a cross, right? And this next candle is a doji, an indecision candle. The next candle here is red candlestick. Remember, it's giving us buy signal. So we want to look out for a bullish candlestick, what most person would like to call a buy candle. That means the green one. So once you sight the green candlestick, that one serve as a confirmation, right? Then on the next candlestick, regardless of the color, you want to now pick your trade there. So this trade should have started from here on this candlestick. So let me just drop this line there. So the trade, the buy signal or the buy trade would have started from there. Also, you drag your stop loss and keep it below the arrow, right? So as you can see, this one, gradually the price move up and it gave profit. It came down small, reduced the profit, but guess what? The bullish signal is a very strong one, so it moved up again. And of course, your take profit would have been maybe that same distance or even times 2 of that. I'm sure it could have still delivered the profit for you and you would have been happy. Okay, now again, that's for the bullish signal. Let's also look at the bearish signal before we shut down for this particular video. Okay, now the arrow again points down. So once you start the arrow points that, it indicates price is going down now. Okay, then the next thing you look at for is the fast moving average, which is the blue one, has crossed below the red one. Okay, that is a sign that the market is going down. Of course, the arrow is already pointing down. Then the MACD, you want to make sure that the MACD has turned from blue to red, right? So everything is showing us sell signals. So you want to look out for a bearish candlestick. So let me zoom into the area. So the first bearish candlestick you sight serve as your confirmation. As you can see, this red candlestick here serve as our confirmation, right? As you can see. So once you sight it, it's already confirmed that the price is going down. The next thing you do is to enter your trade on the next, by the close of that candlestick, which is the next candlestick. You just enter your sell trade because you have seen sell signal on the market. So the sell is supposed to start here, and of course your stop loss will be above the EMA that started the signal. So this is a very fantastic one. This one will give you a good risk to return ratio because the stop loss distance is so small. So on this one, you want to look out for 1:2, 1:3, 1:4, especially when your stop loss distance is very small. This distance for the take profit will serve as 1:1. Then this distance will serve as 1:2. This distance will serve as 1:3. You can imagine 1:3. 1:3 is like, let's say your stop loss is 5,000 naira and your take profit is times 3 of that, 15,000 naira. Wonderful. Or your stop loss is 15,000 naira, your take profit is times 3 of that, which is 45,000 naira. Good trade. You're risking small to make big. All right. So this is how you can use this hybrid indicator. There are other ways you can use this hybrid indicator, but for this video, we've been able to cover fresh pip strategy and also the hybrid strategy. Okay, thank you very much for staying with me to this time and of course watching every part of this analysis. Okay, all right then. So this is Emmanuel Odogu, okay, from Rally Trade and of course Rally Academy. Okay, so please do wait to follow us on social media and also to follow me on all of my social media. Okay, so you'll be glad you are actually following me because you'll be seeing some tips and of course reviews, market reviews, and of course signals and everything. All right, there. Thank you very much. See you on the next video. Bye for now.